Morning. I am Lakshmipati IMG, Assistant Professor of Commerce, Government First Grade College, Madhugiri, Tumkur District, Karnataka State. My title is Financial Accounting 2. So I am covering under session number 7 application of average class in fire insurance claims. So first we take one problem. A fire occurred in the premises of Aditya on 25th September 2017 when a large part of the stock was destroyed. Salvage was rupees 15,000. Aditya gives you the following information for the period from 1/4/2017 to 25/9/2017. So purchases rupees 85,000, sales rupees 90,000, goods costing rupees 5,000 were taken over by Aditya for personal use, and cost price of stock on 1/4/2017 was rupees 40,000. Over the past few years, Aditya has been selling the goods at a consistent gross profit rate of 33.1/3% on sales. The insurance policy was rupees 50,000. It included an average class. Aditya asked you to ascertain the amount of loss and claim to be made on the insurance company. So based on this information given by Aditya, so we prepare the third step. In every fire insurance claims there are 5 steps, but in this problem need not to be prepare step number 1 and 2. So step number 3 is prepare memorandum trading account to ascertain the closing stock on the date of fire. So memorandum trading account for the period from 1/4/2017 to 25/9/2017. We are debiting opening stock rupees 40,000, to purchases 85,000 less goods used for personal purpose, that is 5,000 to be deducted from 85,000. We finally got 80,000, and gross profit are also calculated by using the percentage given in the problem, that is 90,000 into 33.33%, that is 1/3 or 33.33%. We are obtained 30,000, and sales to be credited to memorandum trading account. The difference amount is 60,000. 60,000 is treated as stock on the date of fire. And next step, fourth step, calculation or ascertainment of actual amount of loss of stock by fire. So stock on the date of fire rupees 60,000. Salvage is given in the problem, that is 15,000. That amount to be deducted from stock on the date of fire, and finally we got actual amount of loss of stock by fire rupees 45,000. Next, calculation of amount of fire insurance claim is the last step. Amount of fire insurance claim is calculated by using average class. What is the formula? Amount of fire claim is equal to actual loss of stock by fire divided by stock on the date of fire into policy amount. In this problem, actual loss of stock by fire rupees 45,000, stock on the date of fire rupees 60,000, and policy amount is also given, that is 50,000. And finally we are obtaining the amount of fire insurance claim by applying the above Formula 37,500 is the amount of fire insurance claim. We take another one. A fire occurred we take another problem. A fire occurred in the premises of Pramod and Co. on 15/10/2020. Some of the accounting records were saved from which the following details are available. That is opening stock on 1/4/2020, that is 45,000. Purchases 1/4/2020 to 15/10/2020 rupees 2 lakh. And sales from 1/4/2020 to 15/10/2020 rupees 3 lakh. Rate of gross profit 30% and salvage rupees 8,000. So it was the practice of the company to value stock at 10% less than the cost. The amount of policy rupees 30,000. There was an average clause. So prepare a claim for insurance. So based on this information, total 5 steps are involving in fire insurance claim. In this problem also need not to prepare step number 1 and 2 because directly given in the problem. So step number 3 is the memorandum trading account for the period from 1/4/2020 to 15/10/2020. Debiting opening stock. In this problem some adjustments are given regarding stock. So that is undervaluation. So for what is the value of opening stock? 45,000. So into 100 divided by 90. Undervaluation means 100 divided by 90, 10%. So we got 50,000. Suppose we are applying undervaluation, the value of opening stock increases. We are applying overvaluation, the value of the opening stock decreases. And debiting the purchases and calculating the gross profit by given the valuable information in the problem, that is 3 lakh into 30 by 100, 90,000. And crediting sales 3 lakh and difference amount is called 40,000. That 40,000 we are treating balancing figure. That balancing figure we call it a closing stock on the date of fire. And next step, calculate the actual amount of loss of stock. So calculation of actual amount of loss of stock by fire in the following ways. First we take stock on the date of fire, that is 40,000, less salvage in the problem, that is 8,000, and actual amount of loss of stock by fire we got 32,000. And finally we are applying the average clause formula. Calculation of amount of fire insurance claim by applying the average clause, that is amount of fire claim is equal to actual loss of stock by fire divided by stock on the date of fire into policy amount, that is 32,000 divided by 40,000 into 30,000. We got amount of fire claim is equal to 24,000. Next we take try yourself. A fire occurred in the premises of Mr. Arjun on 31/12/2019. All the stocks were destroyed except to the extent of rupees 5,600. That is 5,600 is you are treated as a salvage. From the following particulars, ascertain the claim to be lodged by Mr. Raju. That is stock on 1/4/2019, that is 10,600. Purchases up to 31/12/2019, that is 60,800. Wages up to 31/12/2019, 3,000. Freight up to 31/12/2019, that is 1,000. Sales up to the date of fire 80,000, and policy amount is also 10,000 is given. and the rate of gross profit is also 30% on sales is given. So next we take one examples calculation of fire insurance claims under average class policy. On 16th August 2014, the godown of a limited firm was destroyed by fire. The records of the business revealed the following information. Stock on 1/4/2013, that is 2,29,500. Stock on 31st/3/2014, 2,45,700 is given. Purchases during the year 13-14, 9,30,000, and sales during 13-14, 12 lakhs, and purchases from 1/4/14 to the date of 5 rupees, 2,25,000, and sales from 1/4/2014 to the date of 5 rupees, 3 lakh. It was practice of the company to value of the stock at 10% less than the cost price. Stock salvaged was rupees 18,000. The policy for rupees 1,50,000 subject to average class. So based on this information, we are preparing in this problem, we are preparing all 5 steps, because in this problem we prepare trading account of the last year, because to ascertain the gross profit, that is this account is before the date of fire. That is opening stock. One adjustment is given in the problem, that is undervaluation. So what is the value of opening stock? 2,29,500 into 100 divided by 90, we got 2,55,000, and debiting the purchases 9,30,000, and crediting the sales. If any sales returns, it will be deducted, and closing stock also we are applying the undervaluation. So 2,45,700 into 100 divided by 90, we got 2,73,000. When undervaluation of opening stock and closing stock, we are applying undervaluation formula, then automatically the values are increasing. Suppose we are applying overvaluation, then that time value of opening and closing stocks are automatically decreases. So what is the total of debit side? 14,73,000. So credit side total is 14,73,000. What purpose we prepare this account? To find out the gross profit, that is the balancing figure is 2,88,000 is treated as gross profit. What is the second step? Calculate the rate of gross profit or gross profit ratio. How do you find? By using the following formula. Gross profit ratio is equal to gross profit divided by net sales into 100. So what is the gross profit? 2,88,000. And what is the net sales? That is 12 lakhs into 100. We got 24% is the gross profit rate. Okay, what is the next step? Preparation of memorandum trading account, that is period from 1/4/2014 to 16/8/2014. So based on this information, we prepare memorandum trading account by debiting the opening stock. What is the value of closing stock in last trading account? That closing stock is taken as opening stock. And in this situation, no undervaluation and no overvaluation rules is not applicable in the step number 3. Debiting the purchases, concerned purchases is given 2,25,000, and calculating gross profit based on second step. that is 24% on 3 lakh, we got 72,000, and crediting the sales, that is rupees 3 lakh, and debit side total is 5 lakh 70,000, and difference amount is 2 lakh 70,000, that is the balancing figure we treated as closing stock on the date of fire. Next stage, calculation of actual loss of stock by fire by applying average class formula. So by what is the stock on the date of fire? 2,70,000, and if any salvage is given in the problem, that is 18,000. 2,70,000 minus 18,000, we got 2,52,000 is the actual amount of loss of stock by fire. So and finally, amount of fire insurance claim is equal to, by applying average class formula, actual loss of stock by fire divided by closing stock into policy amount 2,52,000 divided by 2,70,000 into 1,50,000. So the amount of fire insurance claim is 1,40,000. The next problem, determine the amount of claim to be lodged by Messrs. Tridev and Company from the following details. A company had taken a fire insurance policy for rupees 1,20,000 covering its stock, and the policy was subject to average class. So particulars, that is 2017-18 and 1/4/2018 to 15/6/2018. Sales 14,43,000, 6,69,500. Purchases 7,89,500, 3,94,000. Even wages and salaries are given 1,37,400, 68,900. Consent period wages and salaries. Sales returns is also given 54,500, 15,800. Even purchase returns is also given 36,400, 9,600, and carriage inwards is also given 27,400 and 9,600. And what is the date of fire? 15/6/2018, and stock on 1/4/2017 was rupees 1,28,700, and stock on 31/3/2018 was rupees 1,89,000. Stock salvaged is also given in the problem 19,310. Stock had always been valued at 10% below the cost. So based on this information, we prepare last year trading account. What purpose we prepare last year trading account? To find out the or ascertain the gross profit. So debiting the opening stock by applying the undervaluation, that is 1,28,700 into 100 by 90, we got 1,43,000. And debiting the purchases 7,98,500 less returns. What returns? Purchase returns will be deducted. We got 7,62,100. And wages and salaries is a direct expenses. That amount debited to concerned trading account. It is not coming under P&L account. 27,400. Sorry, 1,37,400. Even carriage inwards is also given 27,400. And credit side, by crediting sales, by deducting sales returns, that is sales is 11,43,000 less returns 54,500, we got 10,88,500 is the final amount. And closing stock also we are applying the undervaluation formula. 1,89,000 into 100 divided by 90, so we got 2,10,000. Credit side total is more, and debit side total is 2,28,600 amount. So calculation of gross profit ratio, this is a second step. Gross profit ratio is equal to gross profit divided by net sales into 100. That is 2,28,600 divided by 10,88,500 into 100. We got 21% is the gross profit. And next step, preparation of memorandum trading account for the period from 1/4/2018 to 15/6/2018. So debiting opening stock, debit the purchases by deducting purchase returns, and wages and salaries 68,900, carriage inwards also 9,600. So gross profit by calculating using second step, 21 by 100 into 5, 6,53,700. We got 1,37,277 is the answer. By debiting these items and crediting sales by deducting the sales returns, that is 15,800 we are deducting, we finally got 6,53,700. So total debit side is more, 8,10,177. The difference amount in credit side is 1,56,477 is the balancing figure. That balancing figure we call it a closing stock on the date of fire. And next, calculation of actual loss of stock by fire. So that is what is the stock on the date of fire? 1,56,477, and salvage to be deducted, that is 19,310, and actual amount of loss of stock by fire is 1,37,167. And finally, we are using average class formula, that is actual loss of stock by fire divided by stock on the date of fire into policy amount, that is 1,37,167 divided by 156,477 into 1,20,000. So we got amount of fire claim is equal to 1,05,191. So these are the references. We are collecting the valuable information from this, preparing this one. Thank you very much.